Hi everybody, it's Brian Poncelet, and today I wanted to talk to you about mortgage life insurance. Mortgage life insurance that is sold through the banks. What a lot of people don't realize is when you get the mortgage, the banks will try and get some extra profit out of you by selling mortgage life insurance. They make billions of dollars. All the major banks sell this, RBC, CIBC, TD Bank, etc. The problem is, a big problem, I think, is the bank is the beneficiary. That's not you. That's not your family. The bank gets the money. Here's a classic example. Let's say your mortgage is coming up for renewal, or you've got a better rate at a different bank. So in this case, I did RBC. That's where the mortgage is now. And let's say they go over to Bank of Montreal. They have a much better rate. Just by moving from RBC to Bank of Montreal, you just canceled your coverage. That's no good. If you sell your house, you just canceled your insurance. If you refinance your mortgage, you just canceled your insurance. If you pay off your mortgage, the coverage is now gone. Obviously, there's a better way. If you own your own policy, the family gets the money, not the bank. You can typically get double the coverage for much less. It's sort of like saving $30 to $60 on your smartphone plan. So imagine if you can save $7,200 over the next 20 years, and somebody said this is going to take you about 25 minutes to complete. Would you do it? Obviously, for $7,200, most people are going to do that. Wanted to show you a quick illustration of what really is going on with your mortgage life insurance. So in this case, I've got mortgage life insurance through Bank of Montreal. We start off at $400,000, and over time the mortgage keeps going down, and guess what? Your coverage keeps dropping. What's interesting is that the premiums through the banks, they don't go down. They're still the same. Let's take a look at this point here. Let's say 10 years later, husband is unfortunately passes away. They die of car accident or cancer or whatever. The bank gets $150,000. That's what's left on the mortgage. The wife, she gets nothing. If you have your own policy, let's say for example a term 20 policy, I've got $400,000 here. 20 years later, I still have $400,000 worth of coverage, and again, much cheaper than the bank. Strongly going to suggest you go to the link down below. I've got CIBC Marketplace in denial. These are claims that are not paid by the bank. So what has happened is husband or wife had mortgage insurance. In this case, it happened to be through TD Bank. And what they found is, lo and behold, when the husband or the wife passed away, and in this case it was a number of cases, it happened to be the husband unfortunately, passed away, the wife was in, the bank did not pay the claim. So they were actually in denial. Why would you go to somebody like myself? Well, I'm totally independent. I shop the market. You own the policy, not the bank. You save every month. You're going to have at least double the coverage. This takes you all of about 25 minutes to complete. So call me now and we'll get rolling on getting much better coverage for your family. Thank you very much.